I put in $1,000 now, today, what will that be in 10, 20, 30, 50 years time? What's the Bitcoin price going to be in 50 years time? Bitcoin could be 1 million, 3 million, 5 million. What you put in now versus what you're going to return in 20, 30, 40, 50 years time compounded is going to be unbelievable. Welcome to the Ben and Bergs podcast. I'm Ben, your favorite high school dropout and founder of Collective Shift. Alongside me is Bergs, your favorite MBA and CEO of Collective Shift. Join us as we bring you world-class crypto research and strategies to help you dominate this crypto bull market, as well as behind-the-scenes view of us scaling a fully remote subscription research business. And today we're talking about why I am buying more Bitcoin. I've been through a lot of reflection over the New Year period. I always do. And one of my biggest points of focus for me right now is building wealth, right? You know, I've got my business Collective Shift, which cash flows. I earn a wage from that, but also, you know, I'm future planning. I'm thinking about what I want to do in the future. You know, once we get through this bull market, how do I want to diversify? How do I minimize my risk? You know, I've got a lot of concentration in crypto right now, but ultimately I'm looking to diversify in the future, have property, have a share portfolio, and you know, a few other income generating investments. But more importantly, what I realized I wasn't doing is I wasn't adding to my portfolio enough throughout the week or the month, right? So I'd have all my liquid assets in crypto, and I would be living very, I'd be living very close to the edge in terms of, you know, the amount of cash I had in my bank. Basically, I had no cash in the bank because I just had jammed all in crypto. And I was really happy with my crypto positions, right? And still am. And then what happened late last year was that I was leading up into Christmas. It's a very expensive time. We need to buy presents and I like to go on a trip and all this sort of stuff. And I was like, well, I don't have a lot of cash. It was kind of stressing me out. So, and we had a podcast on this. I can't remember exactly what podcast it was, but I sold some crypto. I took some profits. I had some good in trades. I got into, Maple, favorite of mine. It was up 300% in a few months last year. Made some good money. And Bergs' feedback was like, why are you being a dickhead? Why are you 99.9% in crypto? Like, take some cash out, just like live your best life. Like, you know what? Great idea. So,
as you were getting very, very stressed out by this.
Yeah.
And you're so like, just got no money. I'm like, you do, but it's just allocated over here. So take some of that, reallocate it to cash. So when you spend, you can see that you've got money in your bank. You have that kind of level of safety and you feel okay, like you're not flying too close to the sun.
Yeah, exactly. And to be clear, we've got our company, right? But I don't treat that as like a bank account, right? Like we've got shareholders, we got, I can't just take money from that, right? So that is like, that's the company, that's to do the company things. Then I've got my personal assets, which is crypto. And again, I didn't want to touch that because it's crypto, it's all going to the moon, didn't want to touch it. And then I had my salary, which I paid for my everyday things. But then what happened was that, I was wanting to reinvest everything back in my business. So I took, just the salary that would just pay for my everyday things. And then I wasn't adding to my crypto portfolio. And then it got to a point where I needed this money. So anyways, I sold some crypto, went and, did all the Christmas stuff, went on a trip, lived my best life, had a great time, was happy, had some money to spend, had a great time. And then I've come back from my trip and now, I'm earning a wage. And one of my biggest focuses this year was building wealth. And I got recommended this book called Richest Man in Babylon. And it's a really simple book. It's, basically a story of this guy called Babylon. No, his name wasn't Babylon. He was the richest guy in Babylon. And there was some servants who basically looked up to this guy and just wanted to ask him all these questions about how he made the money that he did. And he just had some really timeless, simple principles. And one of them was to feed yourself first, right? Before you go and, pay everyone and give everyone your money, you've got to look after yourself first. And his methodology is to put 10% of your income into, your wallet. And he talks about fattening your wallet each and every time. So whenever you receive money, you put 1 in 10 in your wallet and you forget about it. And then you have 9 out of 10 to spend is his kind of idea. And he said, you don't see the difference. You save 10%, you've still got 90% of what you make, you're not going to make any difference. You're not going to notice any difference. And then a few other things like reduce your spending and all this sort of stuff. And as he was sort of talking, he was talking about 10, 20, 30 years of doing this and then giving that money. And at this time, he was giving it to a bronze maker who would take that money, He'd make bronze shields. He would sell it to people, and then he'd give basically the dividends back to the guy that gave him the money. So he was earning this money. And he was basically talking about how over 20, 30, 40 years, the idea of compounding interest, how much money you actually make. And I don't know what it was about this. Like, none of this is new to me. I knew all of this already, but it was something about just like how simple it was of just putting 10% away to compound over time can just be life-changing. And, you know, he was talking about doing it in relatively safe index sort of like investments. But what I got out of it was, oh my God, I need to buy more Bitcoin.
Amazing.
And the reason I wanted to buy more Bitcoin was because in this story, it talks about something that the richest guy in Babylon did early on, which was that he gave his money to a jeweler or a mate that was going to go like 5 times, 10x his money, but he knew nothing about jewelry, where he did know a lot about bronze making, and he knew the way the business model worked, and he knew how the economics worked, and he had conviction, and he knew everything about it. I know a heap about crypto. I know a heap about Bitcoin. I know how it works. I don't know a lot about the property market. I don't know a lot about the share market. Like, I'm talking about individual stock picking and these sorts of things. But I do know a hell of a lot about Bitcoin, and I know that it's just the best asset on the planet. And in my mind, I'm like, why would I go and buy shares and buy property or do any of these like really low returning things? Yes, I will do it at some point to diversify, but my goal right now is not to diversify. My goal is to build my wealth. So why would I go and park it in the share market and earn 5, 10, 20% in an industry that I don't really have a lot of expertise in, where I have my edge in crypto? And I just know, I'm so convicted that Bitcoin's going to be, you know, the best performing asset over the next 24 months. So what did I do, Bergs? I went in, and now I'm taking not 10%, not 20%, but I'm taking 30% of my income, and I'm reducing my expenditure across the board to put 30% of my income every time I get paid into Bitcoin. And I'm so excited.
Brilliant, mate. I love to hear it. And these are very simple principles where you pay yourself first and then only invest in what you understand. So let's look at pay yourself first. In business, it's called the profit first model. So in business, you decide how much profit you want. Great, I want 200,000 at the end of the year. Great. What are my margins? How much revenue do I need? And you work backwards from there. And when you receive money, if you take money out first and invest it and let it compound over years and years, you generate wealth slowly. It's close to a sure thing with depending on what you're investing in. And you're putting yourself first, and then you have 90% left to spend. And what that does, it automatically restricts your spending so you don't spend wildly. Most people spend 110% of their incomes and there's nothing left over to invest. They're actually in debt. So that's a very, very clear principle. Like, everyone should be doing that. Save up an emergency fund. And then once that 10% has filled your emergency fund, put it into investable assets and grow your wealth. Turn $1 into 2. And the other one is invest in what you understand. So if you're not sleeping well at night, you know, you're either levered up too much, you put too much in, or you don't understand it. And like you said, Ben, with stocks, you don't necessarily understand how they work or the ins and outs of property. It can be quite tricky. You understand crypto really well. And if you sit back, like I've done this myself, and I'm like, okay, I've got, let's say, I don't know, $10 to invest. Where should I put that $10? And even if my goal is to maximize my return over X period of time. So I'll look at, you know, real estate. I'm like, oh, it's complicated. It's long-term. There's a lot of taxes. I'll have like management, everything. Don't want to do that. Then I'll look at things like cash. No, it's going to zero. Bonds. No. Look at shares. I'm like, okay, returns like what, 7 to 10%. If I go into a fund, the best fund on the planet, maybe 20%, then I have to pay my 2 and 20 after that. And then let's look at Bitcoin. Is it going to be more than 20% in that time period? Yes. Do I understand it? Yes. Do I know how it works? Like, that is the place where I will be putting my money. And it makes it really simple, where Bitcoin now becomes your savings account. And it sits there and compounds over time.
Exactly. And I think I was thinking about it differently. The reason like I basically stopped accumulating was because I was happy with my portfolio. Like I have a lot of money in crypto, and the money that I'm going to invest into Bitcoin now is not going to make any substantial difference in a short amount of time. So I think about it like, I think so short term sometimes, like, well, what's the point? But then this idea of this book really got me thinking about, well, shit, like if I put in, you know, let's say $1,000 now, today, right? what will that be in 10, 20, 30, 50 years time? What's the Bitcoin price going to be in 50 years time?
Yeah.
Like, holy shit, that could be like, Bitcoin could be like, who knows, 1 million, 3 million, 5 million, who knows? And like what you put in now versus what you're going to return in 20, 30, 40, 50 years time compounded is going to be unbelievable.
We don't think that long term, and we want that immediate reward. And I remember reading a book, and it comes down to back in the day, like that. I told this story before, where people used to build cathedrals. They were really ornate. They had like, hand tools. This is like 1,000 years ago or more. And it would take more than your lifetime, sometimes multi-generations, to finish a cathedral. So you would be working on something you wouldn't actually see finished. That's how long-term they thought. And now it's like, well, if I don't get a return in like a day or a week, why am I even doing it? So you need to really change your thinking, and it's such a simple thing. And really, the reason people don't do it is because you need to be disciplined over a long period of time, which is challenging to do. You combat that by setting up automation, and that money comes out before you can even spend it.
Yeah, and having that long-term and short-term strategy. Like I've had a long-term strategy, but in my mind, a long-term strategy is like 5 years. But what about like super long-term strategy? Like I want to be holding Bitcoin forever. The reality is most of my altcoins in my portfolio are going to be gone in the next 2 or 3 years out of my portfolio. Like what is relevant now may not be relevant in the future. And what's going to be a lifelong asset that I don't think is going anywhere, it's going to continue to compound, is Bitcoin. I don't want my money in anything else.
Absolutely. And I will highlight to the listeners that there is a trap here that people can fall into, and that is not having enough cash reserves, or in business, it's working capital. So I'll start off with the business example where I know a lot of companies that raised money through ETH. They held all of their money in ETH. Let's say they had 1,000 ETH, whatever it may be. And they're like, great. And they start working away. They've got money. They can pay employees. And then ETH drops by 90%. And all of a sudden, they don't have enough working capital to run their business. So you do need some stability there and some cash reserves. And just like in your life, if you've only got $1,000 in the bank and you have an emergency that costs $2,000, you're in trouble. So whatever that level is for you, make sure you've got that, and then do that 10%. I highly, highly recommend using that 10% rule to fill your emergency fund. Once you're comfortable, 10% rule to start investing.
Yeah. Yeah, I love that. I think, and that automation bug, just getting up and just forgetting about it, I think that's something that is a great strategy. And that's what I did for 2 or 3 years. I took my whole salary in Bitcoin for 2 or 3 years back in like 2018, 2019. And it was just like, I didn't need any money to spend back then. I was living at home, and you just forgot about it, and you accumulate a lot.
And don't even check it. So the example of this is, hey, Ben, when was the last time you checked your superannuation balance?
I never know where my super is.
Exactly. And that is what you should be doing when you're investing in these long-term assets, whether it's a mutual fund, S&P, whatever it is. You just put your money in there, and you might check it once a year or something like that, just like you check your super balance once a year. It's off market. You're not going to sell it. You're just accumulating for your lifetime. Or if you have a super big emergency and you need it, or you're just quitting life and you're going to retire because you hit your number.
Yeah, exactly. So anyway, that's my thought process. I'm back on the horse, and this is a long-term strategy. Like, I bought Bitcoin way cheaper than where it is now, but where I think it's going to be in 30, 40, 50 years is a lot higher than where we are now. And that's the time frame that I'm thinking.
This is a very key point, because Bitcoin, as of the recording date, is at 50,000 USD. The highest it's been is about 65,000 USD. So we're near the top, and Ben is still buying. And the reason he is buying is because he's zooming out and looking at 5, 10, even multi-decadal, taking that time, quite a long-term view. So you're not worried about where we are in the cycle or all-time highs. You're thinking, where is it going to be in 10 or 20 years? And that's very, very different. This is why you see people like Michael Saylor accumulating so much, because he's determined it's the best asset to hold and build his wealth over a very long-term period.
100%. So when Bitcoin dips, I'll continue buying for the long term. But then I've also got my short-term strategy, which through this bull market, I will be rotating out of my altcoins, maybe building up my BTC, taking profits. I'll be doing all of that. But I've got my BTC stack, or a portion of my BTC stack that I'm building, that's going to be there forever.
Amazing, mate. I love to hear that you're still buying.
Yeah, it's great. And you can just look at that from a comparison perspective as well. Like, what's your future projected comparable returns of different assets. But also you've got to think about your strategy as well. Right now, mine is concentration and wealth building. Down the line, it's going to be diversification and, ensuring that I maintain that level of wealth and take a risk off the table.
Absolutely, mate. And you're taking it, like for me, I'm already diversified, but I'm taking advantage of this market cycle.
Yeah. So you don't have to have this is the only thing I'm doing. You can think about it in different ways, position your portfolio with different strategies, and doesn't always need to be about, just doing this one thing and then that's the only thing you can do. You can be a little bit more complex than that.
Mate, I love to hear it. And it's given me confidence as well to actually put more into Bitcoin. So thank you.
Awesome, guys. Thank you so much. I hope you enjoyed the podcast. Hopefully you got something out of that. If you'd love the podcast or you think someone else would enjoy this episode, we'd love for you to share it with a friend. You can send it around and send them a link, WhatsApp it to them, send them a text. We'd love for them to start listening to the show, and it's a great way for people to get introduced to crypto and making sure they're on the right track. But thank you, Bergs. We'll see you next week.
Thanks, Ben, and thanks, champions.